A surprise cut, Fed takes action. The Federal Reserve made a significant move in September 2024. It cut interest rates by 50 basis points. This was a larger cut than many analysts expected. It signals a shift in the Fed's approach to monetary policy. The decision came as a surprise to some. The economy appeared to be strong. However, the Fed cited concerns about global economic weakness and trade tensions. This rate cut is a powerful tool. It can stimulate economic growth. Lower interest rates make it cheaper to borrow money. This encourages businesses to invest and consumers to spend. The Fed's move suggests a proactive stance. It aims to keep the US economy on track amidst global uncertainty. The effects of this rate cut will unfold in the months to come. Behind the decision, understanding the economic landscape. To understand the Fed's decision, we need to look at the economic backdrop. Inflation has been a key concern. It has remained stubbornly high. This erodes purchasing power and puts pressure on businesses. The labor market has been remarkably resilient. Unemployment rates have stayed low. This indicates a strong job market. However, the Fed's decision suggests deeper concerns. Global economic growth has been slowing. Trade tensions, particularly between the US and China, add to the uncertainty. The Fed may be trying to get ahead of a potential downturn. By cutting rates now, it aims to cushion the economy against external shocks. Differing viewpoints, debates within the Fed. The decision to cut rates was not unanimous. There were differing opinions within the Federal Open Market Committee, FOMC. Some members argued that the economy was strong enough to withstand a rate hike. They pointed to the robust labor market as evidence. Others expressed concerns about the risks of not acting. This internal debate highlights the complexity of the Fed's task. Balancing economic growth with price stability is a delicate balancing act. The Fed must weigh a range of factors. These include domestic economic data, global economic conditions, and geopolitical risks. The recent rate cut suggests that the Fed is prioritizing its role in supporting economic growth. Section 4. The road ahead, charting the course of future policy. The September rate cut raises questions about the future trajectory of monetary policy. Will the Fed continue to cut rates? The answer depends on a variety of factors. The Fed will be closely monitoring inflation. If inflation remains high, it may be reluctant to cut rates further. It could even consider raising rates again. The Fed will also be watching global economic developments. A worsening global outlook could prompt further rate cuts. The Fed's actions will also depend on fiscal policy. Government spending and tax policies can also impact economic growth. The Fed may be reluctant to cut rates further if it believes that fiscal policy is already providing sufficient stimulus. The path ahead for monetary policy remains uncertain. The Fed will continue to adjust its course based on evolving economic conditions. Section 5. Market responses. Gauging investor sentiment. Financial markets reacted swiftly to the Fed's rate cut. Stock prices initially surged. This suggests that investors welcomed the move. It was seen as a sign that the Fed was committed to supporting the economy. However, bond yields fell. This indicates that investors are concerned about the economic outlook. The market reaction reflects the uncertainty surrounding the global economy. Investors are grappling with mixed signals. Strong corporate earnings and low unemployment suggest a healthy economy, but trade tensions and slowing global growth point to potential risks. The Fed's rate cut has added another layer of complexity. Investors will continue to scrutinize economic data and policy decisions in the coming months. Section 6. Conclusion. Navigating uncertainty, seeking stability. The Federal Reserve's decision to cut interest rates by 50 basis points in September 2024 is a significant development. It highlights the central bank's proactive approach to managing the economy in the face of uncertainty. The decision was driven by a combination of factors, including persistent inflation, slowing global growth, and escalating trade tensions. The rate cut has been met with mixed reactions. While some applaud the Fed's commitment to supporting growth, others express concerns about the potential for inflation to spiral. The long-term implications of this decision remain to be seen. What is clear is that the Fed is navigating a complex economic landscape. It must weigh competing risks and make difficult decisions with imperfect information. The coming months will be crucial in determining whether the Fed can achieve its dual mandate of price stability and maximum employment.